incredibly strong decade. Central bankers and politicians have stepped in to support the financial markets after the great financial crisis with low interest rates and masses of quantitative easing. Those who've been lucky enough to be invested in financial assets have benefited hugely. However, we think the next decade may be much more challenging and tectonic plates are changing. I think that the Jupiter Merlin portfolios, and indeed all clients' portfolios, perhaps need to be more discerning and to consider downside capture, avoiding falling markets more than just simply rising markets. And actually that is the DNA of the Jupiter Merlin investment process. Because in challenging times, only active managers can select the good companies and channel the other people's savings, which they have the privilege of managing, into the better quality companies. They don't need to own the rest, the bad, the ugly. And in challenging times, which I think we're coming into, the good will survive, they'll flourish, and the bad will simply die and destroy capital. Which is why we at Jupiter Merlin believe that by selecting active managers who typically have concentrated portfolios and low turnover, they typically engage with the company management. They know these companies really well. They can encourage them to have better governance, to support the economies and the industries in which they are working, but also deliver those financial returns to their clients. There are so many, but I'm only going to focus on a few. The first is, from a client perspective, a multi-manager fund of funds such as Jupiter Merlin provides for them a fabulously tax-efficient vehicle, because changes made within those portfolios do not attract capital gains. It provides for them access to the very best underlying managers, many of whom, certainly in our case, have been closed for a very long time to new money. It also provides them with diversity and a one-stop shop long-term saving vehicle. From an IFA perspective, the reporting is excellent on the Jupiter Merlin portfolios. With thanks to Alistair, we've got written, we've got electronic, but also hard copy packs to leave on your clients' kitchen tables. But also little administration. Time is costly, and we know that. And then finally, performance. Our longer running portfolios have more than doubled the peer group returns after fees over time. We have always been obsessed by liquidity, and indeed even in the briefest of presentations we always cover liquidity. We try and ensure that we know precisely what the liquidity profile of the funds, well, the Jupiter Merlin portfolios and indeed the underlying funds are. Firstly, lack of distraction. We only have 6 strategies on our desk. They are the unit trusts. We have some CCAVs, we have a few segregated mandates, but they all follow those 6 strategies. And the underlying portfolios have typically between 10 and 15 funds within them. So we do not have to cover the entire waterfront. We can really focus and dig in to those underlying funds. Secondly, we are rigid about ensuring that the structures in which those assets are contained, be it a CCAV, a UCITS, or whatever, is liquid, because we totally respect our clients' choice. They can withdraw money from our unit trusts every day. So we need to make utterly sure that under every circumstance they can continue to do that. Of the 45 underlying positions we've got across all the portfolios, only 2 do not have daily dealing. And then thirdly, really importantly, we've drilled into the underlying portfolios to look at the liquidity. We've got proprietary software that tells us precisely if we have any unlisted equities in there, what the liquidity profile is of any small cap. We have no dedicated small cap funds at the moment, for example, and haven't had for a while. And then finally, every 6 months, every manager of every underlying fund comes in and talks to us. We have all the data, all the voting records, all the risk analysis, and we can quiz them, and we do. And we genuinely believe it is something that is incredibly important, and we have always believed that.